Everyone buying a home knows they need to consider their monthly payment. But if you're buying in West Houston, there are hidden costs that you need to know about that could essentially double that payment. Hi, I'm Carolyn Bauerschlag, a local real estate agent right here in West Houston, helping people just like you relocate from all over our country right to our great city. So those hidden costs that could potentially double your monthly payment can be broken down into insurance, property taxes, and HOA. Let's cover insurance first. Even just 2 or 3 years ago, we could tell a buyer with confidence that they could get a great insurance premium with a 1% wind and hail deductible for somewhere around $1,800 to $2,400 for the entire year. And now what we're seeing is that the premiums cost maybe $3,000 a year, maybe $4,000 a year. And it's not just for a 1% wind and hail deductible anymore. The best you can get your hands on is 3%. And that's really hard on people, right? So let's say a windstorm does happen. You've already paid the insurer $3,000 or $4,000. And what they say is, hey, before we kick in a single dollar, it doesn't just cost you 1% of your home anymore. It costs triple. So on a $500,000 home, you need to have $15,000 available to cover your own damages before insurance even covers a thing. And now that's triple what it was even just 2 or 3 years ago. I can speak from personal experience. We bought our home in December of 19, and our insurance premium was $2,500 for a 1% wind and hail deductible. And what was offered to me at the end of last year was $5,300 for a 2% wind and hail. Now, I negotiated that down because I just can't fathom paying someone what used to be a deductible in the form of a premium. So what I accepted was a 3% wind and hail deductible, and it knocked my $5,200 bill down to $4,300. That is extraordinarily significant for someone to absorb in a very short period of time. So as your agent, I am always making sure that you're aware of what the insurance costs are before you get too deep into that purchase contract. Another thing that you need to be very aware of with insurance is that flood insurance is not included in that insurance premium. So when we say homeowners insurance, what we mean is hazard, which is going to be wind and hail, fire, and then all other peril. But all other peril is definitely not rising water. So most homeowners in Houston will choose to add on a flood insurance policy. Now, those flood insurance policies lately, at the time of this video, are going to be somewhere around $900 for the year if you're buying it as optional insurance. It is optional insurance if your home is in Zone X, which is a 0 flood risk zone, or a 500-year floodplain, which is a 0.2% risk zone that your home would take on water in any given year. So $900-ish that you can optionally add to your already $3,000 or $4,000 insurance premium. If you are in a 100-year floodplain, your flood insurance is not optional. It is in fact mandatory, and your lender will require that insurance be somewhere in the neighborhood of $2,000, maybe $3,000, maybe $4,000, depending on your home's specific elevation and size. And that can be really hard on people. So whenever you're purchasing a home, we're going to make sure to evaluate the insurance costs and figure out what your tolerance is so that you can be fully covered going forward. The big question, of course, is which direction is this going to go? Back in 2024, we started the year with insurance carriers being confident that they had increased our deductibles enough that carriers would feel comfortable continuing to write policies in the state of Texas. But then we had Hurricane Beryl, and we had that weird freak windstorm called the derecho. And both of those caused billions of dollars of damage. So that did not instill the confidence in these Texas insurers to say, we would like to continue writing policies, right? So what we have to watch for kind of as industry professionals is, are more insurers feeling confident writing policies in Texas, or are more insurers starting to leave the state? Florida is a really great example of kind of watching this and seeing what's going on. Florida is a peninsula, right? Like, it gets hammered by hurricanes and wind events and water and flooding kind of all the time. Houston's in the Gulf, so we're a little more insulated from that. But Florida's kind of the canary in the coal mine, right? And a lot of the trouble that's going on in the Houston or in the Florida real estate market has to go back to insurability. Lenders will not give you a loan for a home that cannot be insured. So we really are vested in making sure that everyone can still get their hands on an insurance policy. Now, the second thing that you need to be really mindful of when you're buying a home in Houston is that our property taxes are significant. Our property taxes are also highly variable. So remember that if you're moving to Texas, it might be because you're attracted to the fact that we are not an income tax state, but states have to get their tax revenue from somewhere. They get it from properties. So in general, I would say if you're buying a home, I want you to assume that your tax rate is at least 2.5%, whatever your purchase price is. Now on the low side in Katy, in the West Houston suburbs and central Houston, we might see 2%. If you're buying a home that's on an acre, you're responsible for your own well and septic, so your tax rate might also be kind of 2% or lower. But in areas that have newer municipal utility districts, think when you hear that water districts, your water district tax is actually a pretty significant chunk of what your overall blended property tax rate is going to be, right? So on the high side, if you live in an area that's newly developed, or if it's been only around for 8, 10, 12 years, you might have a somewhat significant municipal utility district tax that makes your blended tax rate closer to 3%. It might be 3.2, it might be 3.5. On the high end for new construction, we see like 3.75. So that's a very wide swing in your property taxes, and it has a meaningful impact on what your monthly payment is going to be for your loan. So when we're looking at the home that you want to buy, we are always evaluating what the tax rate is so that that cost doesn't come up and sneak up on you. Another extremely important thing that you need to know about your property taxes is that you must protest your property's tax value every single year, right? So every single county wants to derive their tax revenue based on the perceived value of your home. But the county should not be able to tax your home at a value that is higher than the fair market value for the house itself, right? So you shouldn't be paying taxes on a $500,000 assessment if your home, in fact, would only sell for $450,000, right? But these counties are sneaky. So what they're going to try to do is say, hey, Houston's a booming market, your house is great, and I'm going to increase your assessed or taxable value by up to 10% every single year, which is untenable, right? No home, except for those weird COVID years, appreciates 10% in a given year. So what your job is as a homeowner is to protest that tax rate or that tax valuation every single spring. So that's going to be April to May. You have to file your protest, and then you have to have them actually protested. Now, from personal experience, I would highly encourage you to hire the 800-pound gorilla, which is going to be these tax protesting firms, to do it on your behalf. Yours truly is a real estate professional, and I thought I could go and protest my taxes successfully, and I was very wrong. To the individual, they're going to rake you over the coals. When you hire a fiduciary to go and do that protesting for you, magically your tax valuations go down. So take a note from me, hire a professional, protest your taxes every year so that your tax rates or your taxable assessments don't spiral out of control. There are some protections that Texas has for homeowners. The chief among them is going to be the homestead exemption. Now, the homestead exemption provides the homeowner with a $100,000 reduction in the assessed value of the property. So if that property is worth $500,000, the homestead exemption says you can only tax them on $400,000, right? And that's helpful. But maybe it's not helpful enough. So another thing that they do is they cap the amount that each individual county can increase your property tax valuation by every single year. And that cap is 10%. And the idea behind that is that someone who lives in a home shouldn't be driven out of their home just because the property tax burden gets too large. But again, like I said before, 10% a year is honestly egregiously high. Houston in general is an average growth market. We have been about a 3% appreciation rate for most of the last 20 years. The third major cost that you have to watch out for are the homeowners association's fees. Now, on an annual basis, the homeowner association fees are not necessarily that bad. And the reason that I bring this up is that the majority of homes that are in suburbia are going to be a part of these homeowners associations. We have a whole other video that's just about HOAs, and I'll tag that in the show notes for you. But essentially, HOAs can charge somewhere between, let's say, $700, $1,600 a year. And what they're saying is, give us this money and we're going to give you use and enjoyment of all of our incredible facilities. So walking trails, pools, water parks, pickleball courts, tennis courts, you name it, they have it. And those fees on an annual basis, I wouldn't say are too hard for people to tolerate. But a sneaky set of fees in a real estate transaction are going to be thousands of dollars. And it's really rather unfair to the homeowner. Now, we wish as real estate professionals that these HOAs were regulated. Attempts have been made at regulating HOAs out of the Texas state legislature, but we need more comprehensive guidance for what someone can actually charge in a real estate transaction. So some of these fees are things like a transfer fee. That's literally just moving the record the HOA has from the seller's name into the buyer's name. That's a few $100s. They have a statement of account fee that says we need a receipt at closing that shows if the seller has any violations outstanding on the property. They give that to the title company. They know the title company needs it, so they charge a few $100s. They have things called documents or the covenants, conditions, and restrictions that are tagged to the neighborhood that you have to comply by as a homeowner. If you want a copy of those, most of them are under lock and key, which isn't necessarily right? Like you as a homeowner should be able to have access to that kind of freely. But they say, hey, if you want them as part of a real estate transaction, that's a few $100s. And very quickly you get to maybe $1,000 in just basic information, right? And so what's a little worse then are fees that they have, like a foundation fee. They say, hey, for every home that sells in this particular community, we're going to charge 0.25%, and it's going to go into our foundation pool. And it's like, foundation of what? Like, my foundation's fine. And what they're referring to is just a pool of money that they will deploy at their own discretion for whatever they want. You really don't know what they're using it for. But on a $500,000 house, you're paying a foundation fee of $12,050 for something that you can't identify. And another fee that we see is a capitalization fee. And my question is how is that different from the foundation fee? Because we don't even know what the foundation fee is. But a capitalization fee, they'll often cite and say, this is equal to 1 year of annual HOA dues. And they're just going to take it from you. So now you've got maybe $700 or another $1,600 just coming out of your pocket for another garbage can fee. So very quickly, you can have several $1,000s due at the title company on the day that you close for no apparent reason. Your insurance, taxes, and HOA are fees that aren't going to go away in the length of time that you own the home. So it's so important that we cover those things whenever you're coming here to the West Houston area to buy your home. And as your friendly neighborhood realtor, I'm going to make sure that you are fully aware of those fees so that no nasty surprises come around in the following year. If you're thinking about moving to the West Houston area, I would love to be your realtor. My contact information is below. And if you found value in the video that you saw here today, make sure to click the link below to subscribe. We put great content like this out every single week. See you soon.